Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 29th, 2025, and we're diving into Axos Financial's second quarter fiscal year 2025 earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Axos Financial has just released their Q2 earnings, and there's a lot to unpack, from their net income figures to their strategic initiatives. Let's get started.
Revenue and profitability overview. Let's start with the top line. Axos Financial reported a net income of $104.7 million for the quarter. John, how does this compare to their previous performance?
While the net income is down from $151.8 million last year, it's important to note that last year's figures included a one-time gain from the FDIC Loan Purchase. Excluding that, Axos has actually shown a 15.7% increase in net income. Their adjusted EPS of $1.82 also beat the analyst forecast of $1.76, which is a positive sign.
And what about their revenue streams?
Net interest income saw a significant increase of 22.5% to $280.1 million, driven by higher interest income on loans. However, non-interest income dropped sharply due to the absence of last year's FDIC gain and lower mortgage banking income.
Operational efficiencies and future outlook. John, Axos has reported a net interest margin of 4.83%. How does this reflect on their operational efficiency?
The net interest margin is quite robust, up from 4.55% last year. This indicates that Axos is effectively managing its interest-bearing liabilities and optimizing its asset yields. Additionally, they've managed to reduce interest-bearing deposit costs by 51 basis points, which is commendable.
What about their expenses and asset growth?
Non-interest expenses were slightly down from the previous quarter, showing strong expense management. Their total assets grew to $23.7 billion, with deposits increasing to $19.9 billion, reflecting healthy growth in their balance sheet.
Strategic initiatives and market position. Let's talk about Axos's strategic initiatives. What are they focusing on?
Axos is seeing loan growth in commercial and industrial lending, as well as single-family warehouse and auto loans. They've also added $822 million in net new assets under custody, which is a significant increase from the previous quarter.
How does their capital position look?
Axos's total capital to risk-weighted assets stands at 15.23%, up from 14.84% in June 2024. This strong capital position supports their growth initiatives and provides a buffer against potential market volatility.
EPS forecast and analyst expectations. John, analysts had forecasted an EPS of 76 for Axos. How did the actual results compare?
Axos exceeded expectations with an adjusted EPS of $1.82, outperforming the forecast by 0.06 cents. This beat is attributed to their strong net interest income and effective cost management, which have bolstered their bottom line.
What does this mean for investor sentiment?
Beating the EPS forecast is generally a positive indicator for investors, suggesting that Axos is on a solid financial footing and capable of delivering consistent performance.
Key takeaways. In summary, Axos Financial has delivered a strong performance in Q2 of fiscal year 2025 with a net income of $104.7 million and an adjusted EPS of $1.82, beating analyst expectations. Their robust net interest margin and strategic growth initiatives position them well for the future.
Absolutely. Axos's focus on loan growth and asset management, coupled with their strong capital position, makes them a compelling investment prospect. Investors should keep an eye on their continued performance and strategic developments.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Axos Financial's performance in the comments below.